Hello friends, good morning to all of you, and this is the video related to the RBWM JAIIB and it is related to the customer requirement. So first one, it's about the approval process for the retail loans. We have to look at the approval process for the retail loans, that what is the process. So there are different factors we have to look into. We have to look into different factors. Let's say first of all, it's about the collection of application and the information. That's a definitely very prime step. Let's say when you're to sanction the loan, when we are to sanction the loan, the first thing we might be doing, it's about collecting the data from the customer. We shall be collecting the data from the customer. The customer will be giving the application along with the documents which are required basically, right? So this is the first stage of the retail loan approval process. And also the KYC verification is to be done. We have to establish the identity of the customer, right? And that is through the KYC documents. We are having the OVD for that. That is official valid document for that. And there are 5 OVDs, right? But PAN card is not OVD. But we are also to obtain the PAN card for the ITR verification purposes or something, right? And so these documents are to be obtained. And we have to strictly comply with the KYC norms. We have to strictly comply with the KYC norms, and also we have to go for a scoring model. Now, what is scoring model? This is a credit scoring model. Like standardized scoring is to be done. Or let's say we are having a credit scoring template with us, and we are to use the different parameters. Let's say we are to look into the income level or employment level, or let's say existing liability or any delinquency. So each particular parameter is going to be assigned a particular score, and the eligibility will be looked into based upon that, right? So that's about the collection of the application and the information. Collection of the application and the information. The second thing, it's about the due diligence. Now, once you have collected the application, right, then we should be verifying each and everything. So we have to verify the KYC documents, we have to do the PAN verification, we have to do the credit report examination. So let's say if we have done a credit report from the credit information company, like Sibyl is there, Equifax is there, right? So we have drawn a credit report. We have to check that thing also in detail, in depth, about the repayment history, about the existing loans, about the credit score. Each and everything is to be looked into, right? And further address verification is to be done. If there is any, let's say, mortgage is available, in that scenario we should be looking into that particular property also. We should be verifying the title or the ownership of that particular property also. So these all things are to be done under the due diligence. The third steps, again very important, it's about the quantum of the loan. Now the loan quantum will be decided based upon the different factors. Like it will be like dependent upon the income level eligibility. Like if you're having the particular income, and let's say our bank policy allows that you can be sanctioning 48 to 60 times of the monthly income, then that's a maximum amount that can be like lent to you, right? That can be advanced to the customer. So that's the one of the criteria. And other than that, it may also be the case that you have to look into the margin. Now the margin can be varying from 15% to 30%. Margin is what? Margin is the borrower's contribution. Margin is the borrower's contribution. Like let's say we have to sanction 10 lakh rupees of the loan, but we say that you have to bring 1.5 lakh of your own. We will be disbursing 8.5 lakh to you, and 1.5 lakh basically is yours. So 1.5 lakh is what? It is a margin. So here the margin is 15%. So it may vary from scheme to scheme, from loan to loan, from type to type. It may be varying. And also we have to look into the LTV value. LTV value, loan to value ratio. Now what is LTV? It is loan to value ratio. Let's say you have to sanction a maximum LTV of 80%. What does it indicate? It indicates that your security value is, let's say, 100 lakhs. If the security value is 100 lakhs, the maximum Well, a loan that can be sanctioned is 80% of it. So that means 80 lakh of the loan can be sanctioned against the 100 lakhs of the securities. Clear with it? So that is LTV. Further, the fourth one, it's about the, we are to determine the repayment period. Now, the repayment period, like it may be varying from 3 years to 5 years, from 7 years, or let's say for housing loan, if even it can go up to 30 years. It depends upon the product. It depends upon the purpose or the nature of the loan over there, right? So it can be depending on the multiple factors. So let's say for the personal loans, it can be up to 5 years, from 3 years to 5 years. For auto loans, it can be from 5 to 7 years, and also for two-wheeler loans, it's 3 years or maybe lower than that. And for housing loan, it can be like for up to 30 years, it can be there. Clear with it? Then the next topic, it's about the customer segmentation. So these were the factors previously we read about. There were the four factors. The one, it was related to the collection of the application and the information. The second one, it is a due diligence. The third one is the quantum of the loan. And the fourth one, it's related to the repayment period. It's about the repayment period. The next one is also very much important. It's about the customer segmentation based on the income level. So when the annual income is, and this chart is actually very much important. Direct question can be asked to you based upon it. So when the income level is from 2 to 10 lakh, then it is mass market. If it is 10 to 50, then mass affluent. If it is 50 to 400, then super affluent. And then it is HNW, that is 400 to 4,000 lakhs. That is HNW, high net worth individual or high net worth. And further, it is, if it is 4,000 to 1,20,000, then it is super high net worth. And further, if it is above 1,20,000, then it is ultra HNW. We have to memorize these limits. So if it is 2 to 10, then it is mass market. The ultimate market comes under this bracket. The major portion of the market comes under this bracket. 10 to 50 means mass affluent. If it is 50 to 400, then it is super affluent. And HNW category starts from 400 onwards, right? So it is 400 to 4,000. It is basically HNW. If it is 4,000 to 120, then it is super HNW. And if it is above 1 like 20,000, then it is ultra HNW. Okay. Now let's have a look at the very important theory. It's a Maslow's theory. You must have heard about the Maslow's theory. So Maslow, that is Abraham Maslow, gave the idea about the needs and how basically we as individual do propagate for those needs. And Abraham Maslow basically gave the hierarchy that basically told how the individuals do complete their needs and how they move on for the different stages in their life. Like we were having the stage one, and further we are going to stage two, three, and so on. Right? So there are total 5 tiers. And here are the 5 needs. Those are to be basically we are going to learn about. So the first one, it's about the physiological needs. It's about the physiological needs. So physiological needs are the basic needs, the most basic needs. So from the banking point of view, the banking products which are going to satisfy these needs are like the basic products, like you want a saving account or personal accident cover or housing loan. So that will be the basic financial need. So we can be saying it's about the basic, the most basic financial need, right? And these products do basically address the essential financial security and basic living requirements. The second one, it's about the safety needs or security needs. We also say it to be the safety needs or security needs. Now, once your basic needs are met, now the individual will be moving upward toward the financial stability, toward the financial protection, right? Because the future uncertainties are there and we want to protect ourselves. And here comes the funda, because let's say if there is market volatility related to mutual funds and all, you'll be going for the FDR, You'll be going for the recurring deposit because you'll be having the fixed interest rate. And also you can be going for the LIC plans, life insurance policy plan. You can be going for the tax planning products also, right? So these products are going to give you the financial stability. They are going to reduce your risk exposure. The third one, the first one is physiological needs. The second one is safety needs and security needs. The third one is about the love and belonging. We can say these to be the social needs. These are the social needs. Now, at this particular stage, you want to improve your lifestyle. You want to fulfill family aspiration, or let's say we are to maintain the social relationships. Now, it could be related to, let's say, consumer loans or consumer durable loans or personal loans. So it could be related to consumer loan, which will be giving you extra worth, or let's say it could be the personal loan because you are looking so as to fulfill your family aspiration. You can also be going for house loan, car loan, SIP. All these products will be coming there. The fourth tier, it's related to the esteem needs. Esteem needs are related to the financial recognition. So it's about your status and about your financial recognition, we can say. Financial recognition. Now, what products will be there? Because you want financial independence here. You can be looking for the term insurance plans, or let's say you can be going for a second housing loan because those are the esteem needs. Those are not basically your related basic needs or something. Those are the upper limits. Like you have already have gone for all the basic points now, and the fourth one it's related to you want to go beyond that thing now. And the fifth one, it's about the self actualization. You want to give the best value of yourself. It's not about the people around you anymore. It's about the yourself only. Like we can be going for the retirement products here, or the retirement solution, or the pension loan over here, right? So those will be covered in this part. So those can be covered under this part. Clear with it? So we are having the five needs as I told you. First one, it's about the physiological needs, like the very basic points. The second one, it's about the security needs like RD, FD, life insurance plans or tax plans. Social needs means we are talking about the security needs. Social needs or the security needs, the one and the same thing. And further, it could be the consumer loan, personal loan, housing loan, retail loans, or something. Then esteem needs, like you are beyond now. You will be looking for special term products, term insurance products, second housing loans, etc. And the fifth one, it's about the self-actualization needs. Right? Is it clear so far? And also, there is one limitation related to the Maslow model. As per the Maslow model, if we have not like we cannot be directly go to the tier 3. It will be like we will be covering the basic needs, then the safety or security needs, then the social needs, then the social needs, and then after that we'll be going for the fourth tier or the fifth tier. So we cannot be jumping between the tiers directly. It is not the case, right? So that's about the Abraham Maslow theory. I hope that you must have understood that part. Clear with it so far? Do confirm. Now let's move toward the next topic. It's about the customer requirement for service quality. Definitely, customer want higher service level or lower service level. Definitely, they do want the higher standards for the service levels. And more good is the service level, more customer satisfaction will be there, more prolonged trust will be there, more prolonged relationship will be there with the bank, right? And there are multiple, like we can say, dimensions which are expected by the customers. The first one, it's about the reliability. It's about the reliability. Now, reliability basically refers to what? That ability of the bank so as to deliver the services accurately and consistently. So, reliability is about accurately and consistent transactions or error-free transactions. That's the reliability. So, your transactions should be accurate enough, right? Your services what are being offered by the bank should be accurate, should be error-free, right? And there should be consistency. And reliability basically tends to build the customer confidence or trust in the bank. The second one, it's about the responsiveness. So let's say if the customer gave you the application today, it shouldn't be the case that you are just not referring toward it for the next 20 days. Or let's say the customer is visiting again and again and you're still not paying attention toward it. So responsiveness is basically the willingness of the staff. So it's not much about the point, but it's about from the customer side, but it's about the willingness of the staff or the ability of the staff so as to cater the customer, so as to assist the customer quickly and effectively, right? So there should be quick response, there should be time response, and there should be effective communication. So these are the factors related to it. The third one, it's about the accessibility. It's about the accessibility. Now, accessibility is like the convenience, the ease with which the customer can be accessing the banking services. So there are multiple delivery channels now available, like internet banking, mobile banking, ATM network. Those are available over there. The fourth one, it's about the personalization. Personalization is like you are giving some human touch toward it. You are understanding the customer individual needs, and you're offering the customized product to the customer. So we are to tailor the financial product as per the customer needs, as per their income, as per their risk profile, as per their, let's say, aspirations for all the financial goals, we can say, right? Let's say we offered some customized investment plan, or let's say we offered some customized loan to the customer. Their need is about 5 lakh rupees, and if you're offering 25 lakh rupees of the loan and you're asking for the securities based on that, does it match? Or let's say the customer wants a loan of 20 lakh, but you are offering loan amount rupees 10 lakh to him or her. Does it match? No, you should be offering the product based on the customer relevance. So that's the personalization. And about the fifth one, it's about the tangibles, because bank is offering the services. Now, how that can be tangible? The tangible is about the physical aspect of the services. Physical aspect of the services. So let's say if you are giving a clean ambience, or let's say the professional appearance of the employees is good, right? Or let's say if we are offering a personalized passbook to the customer, or clear display of the norms, information about the bank details are there. That's about the tangibles. How you're giving the tangibility to the services. The sixth one, it's about the empathy. Empathy is basically like whatsoever the concerns with the customers are, right? Whatsoever the concern related to the customer are, we have to understand them, and also at the same time we have to address them, but with care and respect. But with care and respect. That's about the empathy. That's about the empathy. Clear? The next one, it's about the assurance. Assurance. So basically, assurance is like something, the ability of the bank employees, not bank, but bank employees, that I assure you that this thing will be done. So that's like a double trust to the customer. Like customer sometimes is not basically trusting on the bank, but it's trusting more on the employee, concerned employee, that I trust you, that I can go for this particular service, right? So you should be courteous, you should be credible, you should be like you should be having the competence, you should be having the knowledge and the skills about the product you are offering. So that's about the assurance. And assuring is covering the multiple points. Like it is covering the competence. You should be having the skills and knowledge so as to perform the service. You should be courteous enough. You should be polite. You should be friendly. You should be credible, like trustworthiness about the service provider. And for the security, it's about the security. Now, customers do expect the freedom from the financial risk, from the fraud, from the uncertainty when they are conducting the banking transaction. So they should be having some sense of security with them. So that's about the assurance. And the eighth factor, it's about the value customer, his business and time. So we should be recognizing the value for the customer. We should be welcoming the customers when they do enter the branch. We should be respecting the customer. We should be providing the quick response to them. We should be giving proper attention to them, and we should not be like neglecting the customer concerns. So these are the different 8 points about the customer requirement for the service quality in the bank. The first one, it was related to the reliability. The second one, it's about the responsiveness, then accessibility. So the reliability is about the error-free transactions, that the transaction should be reliable enough. Responsiveness is a prompt, or let's say the effective communication. Accessibility is like the ease of doing business with the bank. Personalization is like so as to understand the customer needs and so as to cater them properly. Tangible is like we have to give some tangibility to the services, like the ambience, your dressing sense, your impression on the customers, right? Empathy is like we have to understand their points, but with care. That's about the empathy. We should be addressing them also, but with care and respect. And the assurance is about multiple points. Assurance, like we are to inspire the trust, being employee of the bank, right? It's about the so you should be competent, you should be having the knowledge, you should be courteous, you should be trustworthy, and further sense of security to the customer when they are performing the business with the bank, right? And also we should be valuing the customer, his time and his business. So these are the different points that should be taken care of. And after that, it's about the customers requirements from the banks. Customer requirements from the banks. The first one, it's about the right product mix. So the bank is having multiple products, but it's not like that we should be offering each and every product to each and every customer. So we should be offering the product to the customer like based upon what type of customer they are. If there are salaried persons, salaried individuals, or let's say business persons or senior citizens, based upon the customer segments, we should be offering the product. Second one is about the right channel mix. Right channel mix. So we should providing both the traditional channel as well as the digital channel. It's not like that just we are offering the digital channels, but we should be offering the both direct channels as well as the e-channels. Like branch banking should be offered, internet banking, mobile banking, and electronic banking platform. Those all should be offered. Further, it's about the structured process time. Structured process time. Like the turnaround time should be defined, which we say to be TAT. We say to be TAT, that is a turnaround time should be defined, like for the services such as loan approvals, let's say for the account opening. So time prescription should be given, and we should be adhering to that also. That is a structured process time. And further, fourth one, it's about the delivery. It's about the delivery. Now, whatsoever we have promised, we should be deliver. We should be fulfilling our commitment about the product, about the services, about the delivery channels. Then the effective communication is very much required. Effective communication is never one way, it's two way. Now, whatsoever the customer has told us and whatsoever we are having with us, we should be communicating it properly. Let's say if we are offering a loan, we should be communicating it effectively, that what interest will be charged, what will be the processing fee, what will be the service fee, what will be the repayment schedule, what will be the moratorium period, what are the benefits, conditions, covenants, etc. Everything should be properly communicated to the customer. And the transparent service charges, that comes under the same thing about the effective communication. And further, the next one, it's about the effective grievance redressal mechanism should be there. Like if the customer is having some issue, they should be having a grievance redressal mechanism where the customer can be putting their complaint, right? So that's about the customer's requirement from the bank. And that will be all about this video. Thank you so much and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much and see you again.